Well, good evening, everybody. We thank you all for joining, and we're going to be teaching today about how to win in crypto. This is an everything crypto masters class, so we definitely are excited about Darius Green coming back and really teaching us about how to win in crypto. This is my crypto guy. He's my quants guy. He's my analysis guy. There's a couple of things that I want to get started and share with you about. We talked a little bit about the macroeconomic trends of crypto, some of the things that you must watch. The first thing you need to know about crypto is it's a solution. It's a solution to a lot of problems that is happening in our economy. Not only does it solves uh, payments to be made globally, but it also solves basically this mindset of having central autonomy, right? And really using intermediaries. So for all of our lives, to make transactions, we had to make it either through a bank or we had to make it through in some type of financial technology or financial center, right? And they were the intermediary. They controlled the transactions. They knew how much money we sent. They knew how much money was coming in, what's going out. They could take you off the platform like Cash App. They can, take money out of your account. They can add fees like insufficient funds fees. But with crypto, you're a part of a digital economy that's totally different. So if you want to win in crypto, you've got to understand the solutions in real time that digital assets are solving. So don't get into the hype. Everything has to have research, everything has to have analysis. And it's really about reading the signs of global finance. Where is global finance going in the future? And how can you position yourself really to benefit where the economy is going, where the world is going, what's happening in the world? And Darius is going to really give you a step-by-step process, and then we're going to have maybe about a 20 to 30-minute discussion about some things that we know that you absolutely have to start investing in this crypto world. So if you're available, my brother Darius, I see that you are available. You can go ahead and greet the people at this time, and we'll continue this discussion.
Hey everybody, and thank you for that introduction. Yeah, so we come here today to speak about crypto and how to get started and your mindset behind investing into crypto. We know that we have started you guys off with uh, stock investment under Lucas, and we just want to introduce you guys to cryptocurrency and another opportunity to grow your portfolio and reach that end goal of wealth and having a financial secure and just have financial independence for the future ahead. We know that we're fighting inflation, and not only that, we're fighting a currency debasement. The Fed is printing $465 million a day to cover um, what the U.S. is doing in the economy. So with that printing of money, it causes the inflation that we see. The reason why, things cost so much at the beginning of the year, some of it's come down, but you can never stop inflation. So with that being said, I'm going to go into sharing my screen. And I'm going to start off with introduction to blockchain and cryptocurrency. Uh, what I usually start off with in the class is just a definition of investing. Uh, Basically, investing is when you spend your money with expectation of achieving a profit in materials. Hold on, I'm trying to move the stuff off the screen. You just All right, I got it going. With the expectation of achieving a profit or material result by putting it into financial plans, shares, or property by using it to develop a commercial venture. And the second, and the one I want you guys to pay attention to, is to devote one's time, effort, or energy to a particular undertaking with the expectation of a worthwhile result. In general, we're just going to go over blockchain technology, some of the use cases. Uh, a lot of people try to understand if crypto is an asset or a scam. And then we're just going to go over some other topics. The blockchain and how it works. Basically, the definition of blockchain is a decentralized digital ledger that records transactions across multiple computers in a way that ensures the data cannot be altered retroactively. Each record is called a block and is linked to a previous one. They perform a chain. So how you need to look at this is there'll be different computers set up on a network that talk to each other, similar to the internet, and they record data that is on a public ledger for everybody can see the transactions. So if I send $20 in Bitcoin to Lucas, you can see that transaction being held on the public ledger, and the public can confirm that transaction. And when that transaction is complete, it is etched into the blockchain and it can't be changed. So that's the reason why blockchain is very secure. It's like, say, if we each took out our phones and we wanted to search the internet, each one of us on here could go to Google at the same time and pull up a search and get the same results. That's essentially the transparency behind blockchain technology, something that gives us more transparency than the banking system that we have right now. A lot of people don't know how the bank works. A lot of people don't see the transactions, and it's just something that's different and is getting more popular. People want to know where their money is going, what their money is doing in real time, and you have that with blockchain technology. Blockchain and how it works. Uh, you can transaction. You can be peer to peer. You can send it from one part of the globe to another part of the globe without anybody in the middle to block that transaction. So the key features, the key features are decentralization. There's no single point of control or failure. The transparency, our participants can view transactions. Security, the cryptographic techniques ensure the data is stable. Immutability, once added, data cannot be altered or deleted. So also what happens, you have verification. So each network node, which are the computers, they use an algorithm to verify the transaction. And that algorithm is each computer is running on the same algorithm. Then you have block creation. So once it's verified, the transaction is combined with other transactions to create a new block. A block addition, this block is when it's added to the existing blockchain in a linear in its chronological order. So that means, you know, if it was 7 o'clock, it's 7:01, 7:02, it's very linear. You can see that on the public ledger. And then it's immutable. So the new block is permanently added to the blockchain and it's making the data tamper proof. So hackers can't change anything. Blockchain use cases. For the most part, we're going to go over cryptocurrencies. And for the most part, you guys have heard about Bitcoin. Supply chain management. So this can help with any supply chain that you have, you know, from factories to different, even to the UPS, you know, people that ship products back and forth. They can use this for supply chain management. You have healthcare. It can securely store patient records and ensure data. Finance, it will streamline the process, such as cross-border payments and trade settlements. If you ever try to make a cross-border payment, say if you're trying to send some money to Europe, most people know that process can take 7 days to up to 2 weeks to settle, or a payment to settle. And during that time, it's going to be in escrow, and the financial components, they're going to be checking each other to make sure you have the assets to move that type of money to the other financial firm. And that process can make timelines extend. Like if you're trying to do some international business, blockchain helps ease that. For voting systems, I've heard in the news that some public voting systems might be going to the blockchain. You know, we've heard about voting and all that voter fraud stuff. You know, that blockchain can get rid of all that. And smart contracts, basically, there's something that blockchain can use to where if me and you had a contract, it can automatically terminate, or it can automatically settle due to the blockchain in that use case. So cryptocurrency is an asset or a scam. You know, the people who say it's an asset, they say it's a store of value. Cryptocurrency like Bitcoin is seen as digital gold. That is not my words. That is the U.S. Treasury Department. They declare it as gold, digital gold. As an investment vehicle, many view cryptocurrency as high risk, high reward investments. When it comes to decentralization, that offers financial sovereignty and a resistance to censorship. So we've seen people in the public figures being unbanked because stuff they said on the internet. You know, you may be able to get kicked off of social media, and you know, your savings account and banks be freeze. With cryptocurrency, none of that is possible. So that's another reason why most people determine it as an asset. Then you have people who say, you know, it's a scam. They say the volatility is high and the price fluctuates. Some people say it allows for fraud and scams. And then regulatory uncertainty. Just because right now, you know, the regulation is not clear, but as we see right now in the news, that the U.S. government is starting to put out more regulations behind it. The Office of the Comptroller is putting out more regulations behind it. The SEC is putting out more regulations behind Bitcoin. So, in my opinion, crypto and Bitcoin is an asset for users. And so retail investors like you and myself, it allows us as individuals to buy and hold cryptocurrencies as investment. You have institutions, basically the companies and funds, capital funds, hedge funds that are interested in investing in cryptocurrencies for diversifications. And then you have the developers. These are the people behind building the applications and services on the blockchain platforms. Uh, many people don't understand that a lot of this technology has been developed by human beings who is not AI. And, you know, you have human beings that are coding this technology to benefit other human beings. So you have crypto exchanges. You have two types. You have centralized exchanges, platforms like Coinbase, Binance. I'm gonna stop on Coinbase for a second. Coinbase just was added to the S&P 500, so that kind of solidifies Coinbase as a very capable company platform. I usually recommend people to use Coinbase. It's very easy. They have liquidity for people who want to move money back and forth easily. So I usually tell people in my classes to sign up to Coinbase. And basically, the centralized exchange, they hold the users, the people like you and me, they hold our funds and offer liquidity. So if I have my crypto, I can have it on a centralized exchange. I can turn it back into fiat currency. I can change it into other cryptocurrencies, but all the currencies is going to be held on that centralized exchange. Then you have decentralized uh, exchanges. Basically, these are more peer-to-peer trading platforms, and they don't have anybody centrally determining uh, what's happening on the platforms. So the users, you actually still retain control of your funds. So nobody has control over your funds except for you. So there's some things we talk about, and we might talk about later about how we use decentralized exchanges, me and Lucas, on some of the things we do. So you have a market growth potential. So right now in the market, we see it. Bitcoin has been talked about every day now. On the news, if you turn on the channel, you'll see the Bitcoin price at the bottom of the screen, same as like the stock market prices. So you have that institutional investors are joining in. People like BlackRock, you have JP Morgan Chase. These people see crypto and blockchain as a technology to use. Then you have other integration. You have more smaller businesses that are integrating blockchain and cryptocurrencies into their operations. I don't know if many of you've seen the news, but Steak and Shake, they're starting to allow people to use cryptocurrencies to buy their food at Steak and Shake. So if you like Steak and Shake, you can go buy some with crypto. Innovation, everybody like people like it for the innovation. You have a continuous development of new applications, new cryptos, and improvement to blockchain technology. And I'll go over the challenges real quick. Just regulation, security, scalability. So those are things that always challenge some of the smaller cryptos. But in summary, we said blockchain and cryptocurrency technologies offers a significant potential, also notable challenges, but understanding their mechanics and use cases and evolving landscape is crucial for navigating this fast development field. Thank you. So I'm going to start by going back, and we can have some questions about other cryptos. Then I have another slide that I will go over at the end, so people can start looking at the uses that are being used right now for crypto. So right now we can open it up, Leonard, and turn it back over to you and some of the people who have questions about crypto. And
Of course. Yeah, yeah. We're gonna open it up for the next 3 to 5 minutes for any questions over the presentation. And then me and Darius is going to talk about the cryptos that you must have in 2025. We think that you really going to have to really start looking at these and really start taking a bite out of that apple and really start really listening up to what has been said. So if you have a question, put it in the chat, or you can unmute yourself. If you're unmuted, then just go ahead and say your name, and then if you got a question for Darius, there's no question that's a stupid question, and if it is a stupid question, then we got a good answer for it, so it's no problem. So go ahead right now.
that's
If you got to, no matter how crazy it may sound, you don't have to sound educated. That's why you got us. Just whatever question you got about crypto, it could be something personally about your account. Everybody, if you got one, just go ahead and ask it at this time. We're going to give you about 3 minutes, and then we're going to go to a real breakdown on some of the things you need to have. Okay, that's a
yeah, it
good.
looked like a question in the chat.
Yeah. That's Ron. He said, "Can I buy crypto with my Fidelity account, or would I need another app account?" That's a good question, Darius. You already know about it. Basically, kind of tell them a little bit about, with Fidelity and how you can get exposure to crypto with ETFs, but you won't be able to have direct access to crypto through Fidelity. You can only buy it
Yeah,
uh, through the
that's
exchange
correct.
from ETFs. Yeah.
That's correct. Fidelity will kind of act as like your exchange, like a centralized exchange. So they're going to use your funds and they will invest in crypto with your account. Actually, Fidelity put out that they're allowing exposure to cryptocurrencies like Bitcoin. You can go through that using your IRA account, your 401k. Fidelity is allowing people to take money from their retirement accounts and put that directly into cryptocurrency. So you definitely can do that with Fidelity. That was a big announcement earlier this month, or maybe even at the end of middle of April. So you can go right to Fidelity. You should be able to see that on pull up the screen, and you should be able to find that on one of their home screens.
Is there any
You
other
got any more
questions?
to add?
Anybody got any questions? Make sure you put in the chat. We got a couple more minutes. So go ahead and ask her at this time. Okay. From Deja, she said, how much do you need to start with? So Darius, kind of talk a little bit about in the beginning when you were investing in crypto, and then talk about realistic, based on how much money you're taking in per month. Kind of tell people about how the cycles work and how DCA, dollar cost averaging, and things like that. I think that's where we can start and kind of give them a mindset about that.
Gotcha. Yeah. So I'm gonna go off with my story and follow along as the points that you added. For my story, I was already in the stock market before I invested into crypto, so I already had some good returns on my stock market portfolio, and I just wanted to invest 10% of that. So basically, I was 60,000 in my stock portfolio, and I wanted to invest $6,000 into crypto. So I know that's not the normal use case, but a percentage wise of your portfolio is a good way to start. So, 5 to 10% of your portfolio, your overall portfolio, that just gives you uh, the right to be, to not understand and not make a mistake and not crash your whole portfolio. Um, what I usually say is, this is you want to treat this as a monthly investment. $50, $100 to $200, but whatever that is good with your budget to buy monthly. Leonard brought up dollar cost averaging. That is something that the guys like Warren Buffett, Michael Saylor, he's doing that right now with Bitcoin. It's a very simple way to ensure that you're going to see good returns on your money. You're not guessing in the market. You have time in the market. Uh, and I always say there's a saying, time in the market is better than timing the market. So you want to have time in the market. You don't want to try to chase, as we say, you don't want to chase the market. You want to stay in the market. You want to buy monthly, dollar cost average, and you'll see really good growth potential on your investment. Now, when it comes to the cycles, um, we all know as crypto veterans, there's a 4 year cycle that happens with Bitcoin, with crypto, and specifically because of Bitcoin, the halving cycle. Uh, what that means is when I was explaining earlier about the blocks. So when a block is complete, uh, and the computer node completes that block, they get a reward for achieving that. So if I had computers running and my computers finish the block, we get a block, we get a partial fee of that block for completing that, and that's called crypto mining. So what happens during the halving cycle is that reward halves. So if I was going to make I was going to get 10 Bitcoin for mining the block. That goes down to 5. So that happens every 4 years. And since that the rewards decrease and it's more expensive for you to be a crypto miner, a lot of the nodes have to drop off. Um, a lot of the transactions actually start to get slower because not as many people are on the network um, actually being able to afford to crypto mine because it's an expensive project. Right now you have major companies doing it with hundreds of millions of dollars behind it, but you used to could mine crypto with your simple laptop, but now you don't have a conglomerate of money and a network and supercomputers. It doesn't really make sense for you to mine crypto. Um, but yes, I would go back to look at your budget, look at your portfolio. Um, we usually tell people 5 to 10% of your portfolio until you get comfortable investing into Bitcoin and crypto, and then monthly buying. Just look at buying $50 to $100 a month, and once you see that growth over time, you'll be comfortable to add more money. But the investment is going to grow on itself, so you're going to be able to make good returns. Back to you, Leonard.
Is there any other question? We got probably room for one more question. If not, we're going to switch gears and talk about some things that you very much need to know. If you have your question in the chat, just put it here on the chat, and we'll definitely get back to your question. It's 7:30, so we got the next